People make investing seem so complicated. You got stockbrokers and crypto enthusiasts and real estate moguls, and all these people have content. All these people have a program and a course and a 17-step process. And I'm here to show you how simple it can be. All you need to focus in on are three things only. Stick with me and I'm going to walk you through those three things. First and foremost, you need to understand why you're investing and make that the centerpiece to every single action that you take. Once you understand why you're investing, next you need to understand and you need to decide how much you're going to invest every month, every quarter, every year. And that's the minimum. Make that a non negotiable. The third step, and this is the step that people think is the most complicated, but I promise you it doesn't have to be. The third step is deciding what to put that money into. Once you understand where you're going to put that money, then you can actually automate this process and take all of the thought out of it. So let's dive right into this. So, first and foremost, why should you be investing? That's simple. The reason you need to be investing is because you are trying to buy back your freedom. All that investing is taking the money that you make in your job or in your side hustle and putting it into something that's going to buy you more options, more opportunities, more freedom in the future. So why would you do it now? Is because the faster you get started, the faster you can let the time value of money actually work. The faster you can let the compound interest that you're going to get from leaving your money in the market or leaving your money in real estate for as long as possible to actually help you put your money on steroids and grow your financial peace over time. So when you think about the process to start, all you first need to do once you decide how much you care about your freedom and how much you really want the ability to leave a job if you don't like it and how much you want the ability to take the vacation with your family that you've been so desperately wanting to take. Once you get that emotional connection, then the next step is just to decide how much within your budget you can actually set aside. And some of you, that might be $50 a month. And that's a great place to start. Some of you, it might be $500 a month. And some of you have been sleeping on all the money that you could be saving. And you might have $2,000, $3,000 a month that if you budget your money correctly, you can actually put towards growing your future freedom. So once you decide how much money you're going to invest every single month, then you can move on to step three. And this is where we're going to spend the majority of our time, which is deciding what investment vehicle to put that money into. Now, I started it in real estate. And, at the time, I actually thought that real estate was the best investment vehicle out there. And I've changed my stance on that over the last few years. I still think it's a great, great investment. It has huge tax benefits. It has so many things that can help you exponentially grow your wealth. But shout out to Wall Street Trapper. I learned a lot from what he said when he was talking about how most wealthy people start with stocks, own a business, and then funnel that money into real estate. And I would say I don't disagree with that approach because there are so many pitfalls along the way that you can bump your head, lose a ton of money, take on a ton of risk on the real estate side. So I'm going to focus in these early conversations around the investment vehicles that I believe really strongly in, especially if you're young, starting out with not that much money. And those are going to be your stocks and your crypto. Now, keep in mind, I am not a financial advisor. So use the stuff that I say as, information, as knowledge, but I am not giving you stock tips. I'm just telling you what I do and why I do it. But again, if I were to talk to my younger self, or when I'm talking to my younger cousins, I tell them, hey, stocks, crypto, that will get your foot in the door, low barrier to entry, dive right in. And the way that you should approach your stock investing and your crypto investing is, ask yourself how much risk you're willing to take with the funds that you've set aside, and ask yourself if you're willing to leave whatever money you put into the market for 5 years or more. If the answer to that question is yes, absolutely, I'm willing to put money in and not touch it for 5 years, then this is the strategy that I personally would recommend and the strategy that I'm taking at the moment. And that would be only index funds such as SPY, which tracks the entire stock market, or something as simple as Investco QQQ, which is essentially just going to take all of the tech stocks, put them in a bubble, and allow you to invest them all of the tech stocks all at once. Or if you don't like that, then if you're, investing through your job's 401k plan or things of that nature, then you can put your money into things called target date funds, which essentially just take the approach that says, I'm going to look at how old you are and I'm going to adjust your investment portfolio within the stock market solely based on the risk that the portfolio thinks you should be taking based on your age. And so when you're younger, let's say you're 23 years old, that's going to be a very aggressive portfolio blend. So you're going to have mostly stocks, maybe heavily weighted towards the tech sector, maybe heavily weighted towards things that are going to give you a high rate of return. And then as you start to age, that fund just readjusts and it starts to put money into things that are more safe. It might buy more bonds. It might buy things that are considered blue chip stocks, and that will allow you to adjust your risk down over time. I'm not a huge fan of those. I recommend just going in and finding the actual index fund that is more closely aligned with where you are for your risk profile, and just diving that money, pouring that money directly into that fund yourself. So on the stock side, again, I say I would either do only index funds, which is just going to be a basket of stocks, either in a particular type of the market, which could be all technology or all healthcare, or something that tracks the entire stock market, such as SPY, which would be in a sense just the whole S&P 500 all in one spot. So when you look at the stock portion of this plan and you follow that approach, or if you say, okay, I want to be a little bit riskier, then you can do something as simple as what Ian Dunlap from Market Mondays recommends, where you've got some index funds and then you pick one or two tech stocks or one or two stocks that you believe really strongly in and pour a small portion of your money into that along with that index fund. So a perfect example for myself would be I, on a monthly basis, take out a portion of my funds and put them directly into the tech sector. So I'm buying QQQ, and then I put some of my money directly into NVIDIA and directly into Microsoft. Those are my two tech stocks. Those are the ones that I believe in so strongly. So that is what I just set on autopilot for the stock market side. And then when I think about the other aspect of my investment strategy, that is crypto. And I know everybody feels differently about crypto, but one thing that I can almost guarantee you is that it's the wave of the future. Bitcoin specifically isn't going anywhere. And this is, in my opinion, over time, you can look it up. Bitcoin has been the highest returning asset in history. For the amount of time that you could actually invest in Bitcoin, you could have exponentially grown your wealth if you took just $1,000, especially if you took $10,000 or $50,000 and poured it into Bitcoin in 2017, for example. That number, a $50,000 investment in 2017, would have been close to $800,000 today. And that is mind blowing because I know people that had 50 grand back then, and I know people that blew 50 grand in 2017 and had nothing to show for it. So I urge you all to, if nothing else, be open to the fact that if you put some money into stocks and some money into crypto and you pick the right balance of stocks and crypto, then in the next 5 years, in the next 10 years, you will almost certainly be so much wealthier than you would have if you had done nothing. So on the crypto side, the way that I approach it is very similar to what I think about when I think about stocks. When my stock portfolio gets allocated, I'm picking my index funds and I'm picking my one or two individual stocks that I so strongly believe in. Well, for me, on the crypto side, Bitcoin is what I look at as my index fund. That is kind of like the safe, most credible piece of the crypto environment possible. And the reason why I consider that the safe approach now, especially, is because now you've got all these large hedge funds, the BlackRocks of the world, that own so much Bitcoin that now they won't let it fail. And this is in my opinion. Then you've also got it being included in certain funds that are, people's retirement accounts and people's investment accounts. And now that Bitcoin is included in that, that is a very high probability that's going to continue to go up, because now that it's reached adoption, more and more large funds and large pools are going to start buying this as an asset class. So if you put your money in Bitcoin as a store of value, a portion of that money is going to be sitting in crypto. And in my opinion, this is an asset class that's only going to continue to go up over the next 5, 10, 20, 30, 40, 50 years. And it's still relatively early stage. So let's assume that every single month you have whatever, 15% of your income that you can actually allocate to stocks and crypto. On the crypto side, I talked about Bitcoin being what I consider to be the index fund of crypto if you want to relate it back to stocks. And then you can have your one or two individual stocks on the stock market side, just like you can have your one or two individual crypto coins on the crypto side. So the ones that I personally prefer would be your Ethereum, just because it is tied to a platform that has been around for so long and so many people have built on top of it. And then other things such as XRP, which has a very, very high level of functionality in the banking world because it allows you to transfer money so quickly. So let's assume that my portfolio is allocated this way. On the stock side, I'm going to invest $1,000 every single month, split between two different index funds and Nvidia and Microsoft and Amazon, as an example. That is my stock portfolio, and I allocate that $1,000 to those five different accounts. And then on the crypto side, I allocate $500 to $300 going to Bitcoin every single month, $100 going to Ethereum every single month, and $100 going to XRP every single month. Now, that's $1,500 that I can put on autopilot and make sure that every time I get paid, I automatically route $1,000 to my brokerage account, which could be Charles Schwab, it could be Vanguard, it could be Fidelity, and you just have it automatically go to that brokerage account, and you have that brokerage account automatically set up to purchase, one share of this index fund or $500 of this index fund every single month. And every single month, it doesn't matter what the price is, it's called dollar cost averaging. You're just going to buy and buy and buy. So you do that on autopilot. The same with the $500. You're saying automatically this $500 from my bank account is going to flow directly into a separate savings account, right? And that separate savings account is going to automatically be pushed into my Coinbase account. And I recommend Coinbase for cryptocurrency investing. You push that $500 into your Coinbase account, and you just allow that money in that Coinbase account to buy Bitcoin like clockwork. Every single day that you buy Bitcoin should be a timed buy, early stage. We'll talk about time in the market and all that stuff in other videos, but for now, you should just say, hey, on the 5th of the month, I'm going to put $500 into my crypto account through Coinbase. I'm going to buy $300 worth of Bitcoin, regardless of the price. I'm going to buy $100 of Ethereum, $100 of XRP. This is just an example. Now, if you do that, then you can set that up and you can forget about it. You don't have to check your account every month. You don't have to check your account every week. You can just say, I know that I've decided that $1,500 out of my out of my monthly pay is going towards stocks and crypto every single month like clockwork. And over time, you'll realize how much more growth you will gain. Let's just assume that you're getting 10% in the stock market in this blend of investments that you've got on the stock side, and let's assume that you get 10% on the crypto side. So now every single month you're getting 10% blended across these platforms, but over time you know that even though it's volatile and these stocks and this crypto can fluctuate, one year you might have a 30% jump. In one year, you might have a 50% jump. It's so possible. Ask the people that owned NVIDIA in 2020 and kept it until 2024 what those returns were. Ask people that bought Bitcoin at $3,000 a coin who still have that one coin today. And as of this video, it's worth over $100,000. That could have been you. That could have been me. I knew about it and I didn't act on it the way I should have. So going forward, when you think about your investment strategy, all you have to think about is why do you want to invest? And if the answer is to get freedom, then you'll be motivated to keep going. And then you say, how do I want to invest? And that in the short term can just be into stocks and into crypto. And then from there, you say, what platform or what vehicle do I use? Selecting, hey, this is my stock brokerage account. This is the Coinbase account I'm going to use. And then from there, just saying, because I know what I want to invest in and because I know how much I want to invest every month and where I'm going to do it, pick those few different investments, set it on autopilot, check it once a month or once a quarter, and then determine that you're only going to make a move on that money in 5 years at a minimum, or if some other amazing investment opportunity comes along the way further down the road, then you could consider pulling money from those investments to invest in something like a small rental property or like something else that could give you exponential returns. But once you get to that point, then you could have done your math, done your research, and really understood how to grow your money even faster. Guys, I promise you, if you just keep it simple, you do those steps, you follow along, I'm going to keep giving you jewels and gems, and let's build ourselves financial freedom together. Like I say, this channel is only here to help you either get the job you want, which we've had some videos on that, advancing your career, which we're going to talk more about that, and ultimately invest and save your money wisely so you never need a job in the first place. And that is what this video is about. Keep rocking with me. If you ever need resources, especially on the first portion, which is just getting the job so that you can have more accessible income, I have a guide linked below that will show you exactly how to prepare for interviews. Get that book, read over it, short read, and leave me some notes in the comments if you find this stuff helpful. Thank you so much. I appreciate it.